How you doing, friends? Ernie here, and this is the final hour to expiration. How dramatic is that? It is. It is. It is. I'm sorry, I was distracted there for a second. It is Tuesday, September 20th, and it is 3 o'clock. We're starting a little bit early today, and we're going to attempt to do a trade in the final hour of expiration of options on the SPX, or the S&P index. That's what we do as a service. We do that every day. Of course, we're not doing the final hour. We're doing it as a day trade during the day. And today's trade, by the way, is still on, and it is very close. It is actually a pinned trade right now, and if it will stay there, fat chance that it will actually stay there, but if it will stay there all the way to the end of the day, there is a very good chance that we could get about about a 600 to 700% return on our money. That would be nice. But trying to rely on something staying in one spot in this market for any period of time, I am inclined right now, because of the behavior, to take it off right now. And the way I'm going to do that, I'm going to demonstrate this. Let's bring it over here. All right, so here's the call. It's a 15 wide fly. Took it right at the very beginning of the market, and we're sitting almost exactly at the pin trade. And because this is a small account, I don't want to get a pattern day trader strike on me, so I'm going to employ a technique that we call the pattern day trader hack, the PDT hack. That's right. That's what it is. It is not necessarily our thing. It's not like it's a magical, mystery strategy. I mean, I'm sure other people have discovered how to get around a pattern day trader hack by doing this. But it is something that we practice here, and it does take a little bit of care in what you are doing. So let me just talk about the pattern day trader rule first. Now, when you have a small account and you're trading 5 days a week, a day trade, you really stand to violate the pattern day trader rule, which says that you can only do 3 round-trip trades on the same asset in any 5-day rolling period. So if we're doing it 5 times a week, that kind of invalidates that. The way we get around it is by not actually opening and closing the trade. We never close the trade. But Ernie, how do you ensure that you get the profit that you want? That is the trick. What we do, first of all, everything that we do is around putting trades on that are long flies, long butterflies, symmetrical butterflies. And so when you do a symmetrical butterfly, it's all of one asset or options type. Either it's a put or it's a call. So it consists of 4 different options contracts, 2 shorts that are right in the middle of the fly at its apex, and then 2 longs. Those are the wings. And then they will provide you with your risk to reward. And we always put them out of the money. That way we get asymmetric properties in that fly. Typically we're looking for 1 to 6 or 1 to 10 risk to reward. That's very different the way anybody else trades 0 DTE. Most everybody else does an iron fly or an iron condor, and they put it about at the money, and they put on super high probability trades that have super high risk. We do exactly the opposite. We do very low risk with huge potential profit. They do very high risk with very small potential profit. You see the difference? Now, when we put on a trade like this, we want to lock in the profits. Right now, I am sitting dead smack in the middle, right at the pin trade. So I will maximize my profit at this time of the day. Now, of course, if I let it go and it was right here, say at 355, I would probably have 3 times the profit. But that's the thing. I don't know if it's going to stay here. So, plus, I'd like to put on an end-of-day trade, the final hour trade. Excuse me, final hour trade. Where's that water? There you are. Ah, that's better. So let's take a look at it. Man, it's moving already. So let's take a look at this. So here we are. We're sitting here with this final hour trade. It was just a few seconds ago sitting right here in the middle. Now it's moving down. Let's take a look at it on the chart. So here it is on the chart, going up and down, up and down. The middle is right here at 38.50. So currently, let's see, put this trade on. It cost me $1.80, and if I took it off right now, I could take it off for about $4.40. So more than 100% return. And the way I'm going to do that is I'm taking the exact opposite trade. This is a put fly, by the way. I've created a call fly with the same strikes, and I'm selling it instead of buying it. All right, so that's what I'm going to do. I'm going to do that right now. I am going to execute this trade, even though I am, if I held on to it, I might be able to get it a pin, but I am going to sacrifice myself for the good of the channel. All right, so here we go. We're going to confirm this trade. All right. And now watch what happens when I click send. It's going to tell me something. It's going to say, oh, hey, wait a minute. You are in a patent day trader quandary. As a matter of fact, I've already violated the patent day trader rule. There, it's on. Let's take a look. It's working. Should hit soon. Especially if we go up a little bit. So we need to get up to here. I think it'll probably fill right around here at 38.48, but we'll see. Now it's going down and away from it. Might have to force it a little bit, offer something slightly less. Let's try offering 425. Got it. All right, so I've locked in that profit at about $260 or so, whatever that was. Let's see, the difference between $1.80 and $4.25. So I'm going to do it on the calculator. That's $4.25 minus $1.80 is $245, so $2.45. And divided by $1.80. So it's about 140% profit. That's not bad. I mean, I guess I could have held on to it and waited it out and see whether or not I could get a pin. But that's a good profit. I'm very happy with that. And that's what we would consider a mid-tier profit in our distributions of returns that we normally get on our trades. So what does that mean? What does that mean? All right. So today is all about doing the out-of-the-money butterfly trade. Now, let me just be very clear here. This is what we do. So as you can see, all right, so that's not, I got to turn this off so we don't see this. And then put on a similar trade. So I'm going to analyze this trade. So that's the trade. All right, so that's the trade I put on. When I put it on, it was sitting over here to the left. And that's because that's where price was. It was above this particular area. So right now, if we were to take a look at price, you can see I actually put the trade on when price was up around here somewhere, right? This is almost exactly when I put the trade on right there. And this box represents the width of the trade of the fly. And then right here at the very end, at the right-hand side, represents the end of the day, 1600 hours or 4 o'clock. I put it on almost right after the market opened at 9:32. So that's where we were there. And when I put it on, it cost $1.80, and it's 15 wide. Now, a 15 wide fly has a potential profit of $1,500 minus the cost of the trade, so minus 180. So that's a maximum profit of $1,320 if it expired directly on the center strike, right? So $1,320 divided by 180, that's a 1 to 7.3 risk to reward. So for every dollar that we're risking, we're attempting to make up to $7.30. Now, our typical return on something like that is varied. The distribution of returns creates what we call a fat tail distribution. It's not a normal distribution. It's very different. And that's the key here. So the key is that we never lose very much. We only lose, the maximum we could ever lose is that $1. But the maximum we can win is that $7 to $10, sometimes as high as $12, depending on what kind of trade that we put on. All right. So in this particular case, this was a 1 to 7, and I just closed it for a profit of $2.40 something cents, right? So that's what we would call a mid-tier return, and let me explain that. So a mid-tier return, I'll show you my trade log. Hold on. This is my actual trade log. I have to add this trade now. It'll probably bring me close to an all-time high on this account. But let's see. So these are all my trades. There's about 80-something of them. And then over here, I've taken all the returns, which are in the J column. Now, one thing that's very important that you should recognize is that I add in the cost of the trade. So I'm adding in the commission and the fees so that I'm getting an accurate result here, all right? And over here, you can see I'm doing these frequency calculations. One I do based on the actual returns, and the other one I do based on the risk to reward that I take. And then so these are these two charts here. So you can see that this is what we call a fat tail distribution, where we have, on the negative side, we have very limited downside, right? So the max downside I've ever taken is $250, but the max upside that I've taken has been as high as almost $1,200. So what happens is that the vast majority of our trades are in that $0 to $250, right? And so those basically cancel each other out. They may in fact give us a slight edge, even if those were the only trades that we ever took. And then our mid-tier trades are those that are, say, $200 to, let's say, $500 or $600. Those are our mid-tier trades, and you can see there's a handful of those, a bunch of those. And then there's our outliers, right? So about 30% of our trades are our mid-tier trades. About 50% of our winners are the meat and potatoes trades, the bread and butter trades. And then about 10% of our trades are the outliers, right? So that's that fat tail distribution that we're looking for. Now, over time, all my trades will basically follow this distribution based on our strategy and how we actually apply this, right? And as long as I keep my risk to reward in this area between 7 and 10 is the sweet spot, or that's where I get most of it, and that's what is accounting for most of this type of return. And you can also see that, I also record the risk to return here in column F. So even on the biggest winner, $1,100, the risk to reward was almost the exact same as the risk to reward I took on this trade that I just closed, 7.5. Some of our other bigger trades, like this one, $668 right here, the risk to reward I took on that was 1 to 5.7, or almost 1 to 6. Here's another bigger trade that's in our mid-tier to outlier. It was a 1 to 7.1. All right, so you getting the picture. That seems to be our sweet spot. This big one here was at 1 to 6.1. And if you were to do an average of all of them, my average risk to reward comes out to 9.34, or 1 to 9.34. And so there's a fair amount of losers here too. They happen. My win rate is only about 54.2%. But my mean winner is almost $200, and my mean loser is about $125. And that results in, this kind of profit curve. Now and also the other thing it results in this type of trading is very, very low drawdowns. In this case, my max drawdown so far has only been under 3%. So that is the characteristics of this type of zero DTE trading. Now, the other thing that I want to point out, this is a very, very important part of doing these types of out-of-the-money butterflies, these symmetrical butterflies. We're taking relatively low probability trades and flipping the whole risk equation compared to the way everybody else does zero DTE. Everybody else does zero DTE, generally taking very high probability trades. The caveat to that is that they are also subject to huge potential risk. And in fact, when they get into a trade, they're getting into it using a strategy that is primarily meant as a neutral strategy. In other words, they're expecting the market not to move much. But when have you ever known the market not to move much? It always is moving. So right there and then, the basis for their trade is bad. It's just wrong. Not only that, when it moves, they are now almost always into deep losses, which never happens for us. First of all, our max loss is never there, and it takes a long time for us to get to a max loss. And the max loss is always small. So the end result is that the amount of money that we return based on the amount of money that we put at risk is up to 30 times more efficient than the way the other guys do it, the other zero DTE players. They are 30 times less efficient. In other words, it takes them 30 times more money to make the same dollar. 30 times. They have to use 30 times more of their capital to make the same dollar. And on top of that, they are putting themselves at risk far more often and far greater, and they never, ever have the opportunity to make these large returns. Ever. Because it's not possible with their strategy. So I don't know what to say other than the way that they're doing it sucks. The way that we're doing it is optimized. The way that we're doing it has a long-term positive expectancy. The way that they're doing has a mathematical long-term negative expectancy. If you look at the other zero DTE service out there that has a very similar name to me, it took them 2 years, and let's just say this. It took them 2 years to make the same amount of money I made in 2 months. And they used 30 times more money to make that same amount of money in 2 years. I used 30 times less money to make that same amount of money in 2 months. All right? Let that sink in. I'm just going to sit here while it sinks in. Maybe play a little music. Let it sink in. 30 times more efficient. 30 times. Use less money to make a lot more money. Never, ever get into trouble with your risk. You have complete control over your emotions, and that means that you're able to make better decisions, more rational, more logical, clearer-headed decisions. And isn't that really what we want? I mean, that is what this is really all about, controlling our emotions. And with a strategy that constantly is challenging that, constantly putting you on edge, how can you control your emotions? You can't. With this strategy, it is endemic. It is built in to the strategy. So, you know, to me, it's a no-brainer. Now, a new feature of my website, by the way, we have this 4-week trial and everything, but one way that it's going to make it easier for you to try out this service is I added a join button just below. And that join button allows you to join our daily live stream. Now, it doesn't allow you to join the whole service, so it doesn't cost as much as the whole service, but it allows you to join the live stream for a monthly fee, and then you can try out and see what this is all about. Now, during that live stream, you'll be treated like any other zero DTE customer. You'll get the coaching, the mentoring, and the analysis of how we get into a trade, and you'll be able to follow along with it. So that's a new feature right below. That's a new way of trying out the service. And you could stay there for as long as you want, right? You could, pay that for monthly for forever if you want, or if you wanted the full boot and learn everything there is to know about not just this strategy, but the system and the process, the coaching, the mentoring, how to become a truly professional trader, then you would join the service. So anyways, that's for you. Let's see. I'm required to tell you about it. That's like part of the contract. It says, hey, you got to say something. So in this video, I'm saying something about the join button. All right. Let's say hello to the people out there, the regulars. How you doing, Larry? Nice to see you. Is here. Very nice to see you, Is. Ginger Snap. How you doing? Victor. Thank you very much, Victor. And Vadam's here. Let's see. Milo has a comment. I'm going to agree with you. I did look around and could not really find anyone else doing zero DTE that is not doing those high risk, high probability trades with stuff like iron condors. They all do it. They all do it. And let me tell you, we have hundreds of members here that have left them once they found out what we're doing here. All right, Matt, how you doing, man? And Clayton is here. And Tim Dodds. I'm sure there's going to be many more that are going to join us. So hopefully, this was enlightening for you. You start to understand the true difference between the way we're doing it that is more realistic for this type of market. Actually, this is best for any kind of market. We're never putting much at risk, right? So I have this account that I've been using is, it's a small to medium-sized account. It started at 23,000. Now, with today's trade, I guess that would put it over 27,000. So that's about a 4,000 return in the past 3 months. The overall, let's see, where is it? Ah, yes. The total return will end up being a little bit bigger. Let's add this trade in. Let's do that. Let's find out how this works out. So I didn't do a trade yesterday. So we'll add this one in, put the right date on it. Today is the 20th. And it cost me $1.80. I got out at $4.25. All right, so that calculates that out. And the risk to reward, let's do the calculation again. That was 1,500 minus $1.80 divided by $1.80 equal, oh, jeez, what did I do wrong there? 1,500 minus 180 divided by 180. 7.3. So record that. That's 7.3. It was only one contract. So there we now notice it's not 249. It's minus the commissions and the fees. Automatically calculates that. All right. So the next thing to do is to go over and redo the charts. The charts I need to tell it that I'm using that extra row. So I have to tell it that I'm using the 94th row. And do the same thing with this guy here. All right, so I'm back up to 0 drawdown. Looks like I'm pretty much near we're almost right at the all-time high. I guess we're pretty much even with it now. And a total return after 3 months of 17.8%. So I guess if you were to extend that out to 12 months, let's do that. So 17.83 times 4 would result theoretically at the end of the year, if I continue doing this level of performance, about a 70% return on this account. So that's not bad. Now, if I could do a 70% return here until forever, I would become perhaps the greatest trader of all time. So I'm not really expecting that, but with a smaller account, I think that that's definitely in the cards. But once it gets a little bit bigger, you should necessarily be reducing your commitment to each trade. So, you're not going to expect to do 70 or 80 or 100% every year. All right, so we have some more members coming on. Let's see, hold on. Let's go back to the charts and see where we're at. All right, so it was probably a good move. It's probably going to move out of here, but if it does pin, I will be a little bit disappointed. Let's see, we've got Hans. How you doing, Hans? Donald Steele's joining us. Tim says, I've been following you for several months, and I like the strategy, just trying to figure out the right time to join in regards to my 9-to-5 job. I don't know. I don't have any answer for that, but the answer is as much automation as possible, and alerts, setting alerts and doing that, and finding the process that works for you, and of course, finding the best way to use your phone in that endeavor. I know that a lot of people that are in the service, more than half of them are actually trading on their phone, so it can't be impossible. It must, I wouldn't personally do it, but a lot of people do it. That's the way people do it these days. Hey, Anton. Hi, Ernie. I missed the beginning of the stream. Is this table for the last hour trade or regular trades that you do in the beginning of the trading session? Well, this time I'm usually talking about a final hour trade, but I wanted to first go over, and this is what I do with every final hour episode. We first go over the trade that we did for the day, and then we move on to a final hour trade. And Anton goes on. Do you have a tracking history for regular trades that you're teaching as part of your service? That's what I just showed. I don't know if you just saw that. That's exactly what I just showed. I'm not really tracking very heavily. I do track the final hour trades, and the performance right now is down below in the description, right? So right now with our final hour trades, at least in this last 50 or the last 38 trades, we're up a few $100s. The first 50, I didn't track as well, but we're at least up a few $1,000s on that one. So, but what I showed you here, let me bring it up again. This is my personal account. That's what I record every day, and you just saw me put in the most recent trade right there. And as I said, this is the distribution of returns and my frequency of my risk to reward frequency, which, what type of risk to reward I take most frequently. You can see it, it's between 7 and 10. All right. And then I don't know why it doesn't redraw every time. There we go. You have to like scroll up and scroll down to get the chart to redraw. And these are all my stats. So in that 3 months, it's 84 trades, a return of 17.83%, a max drawdown of 2.98%, so under 3%. Largest loser, 356, largest winner, 1100. Average winning trade, almost 200. Average losing trade, about 125. And that's at about a 55% win rate. All right, so there you go. And there's the equity curve. And that's pretty much what I've always expected. Last year, my equity curve was a bit more aggressive than that. But I was working with a much smaller account. So last year, in the first year of the service, so the first 9 months, I chose to start with a very small account to show that it could be done. And I tripled that account in about 9 months. And then I switched over to this larger account so that, and then started keeping track of that. Why wasn't yesterday's trade included? I didn't take that trade. I'm not sure what trade you're talking about, but I didn't take any trade yesterday. Not in the service. And if you're talking about in the final hour trade, that's not part of the service. That's the experimental trade we do at the end of the day. But I didn't take any trade yesterday. Ernie, my point is I will not be able to trade in the final hour, but I'm interested in joining your service to learn how to trade asymmetric risk. Oh, okay. Well, that's fine. Do it. Would it be possible? And do you have the stats for the early morning or midday? Okay, I think I just did that. And you just asked that again. Yeah, this is the stats for the midday. Now, this is my stats. It's not everybody's stats, right? Everybody in the the whole point of doing this service, Anton, is that everybody will learn the system, they'll learn the strategies, they'll learn the process, the methods, the methodologies that we use. And I do my trading as a way of sort of demonstrating that process. And, I send out alerts. Typically, the alerts I usually take if I can get into that trade. And then I record my results. And so those are my results. Now, not everybody is going to get my results because, first of all, most people that are first starting with it, they're new and they're learning the system. Some people do. Some people pick up on it right away. And I would say that there are people in the service that are probably doing way better than I am. So that you get the mixed bag. But you can't look at a service and say, oh, that's what the strategy does, because that's not what the strategy does. That's what Ernie with the strategy does. All right, so that's me. Someone else might have very different results. They may be worse, they may be better. But what I'm saying is that if you follow what I'm doing and follow the overall teachings of this, the type of criteria that we use, the process that we use, you should get similar results. Now, when I say similar, I created a simulation so that we could see what similar actually means. And so what I did was I took, my trading results, my win rate, the range of my winners to losers, and then I programmed that into my simulator, and also the skew of my results and the distribution of my results. And I programmed that into this sheet here. And so I gave it my win rate, my range of winners to losers, and my range of, all that, and my starting price. And I don't always take 2 contracts. I usually take something, either 1 or 2. And it accounts for that, by the way. And then it gives me a fictitious example of what that should come out to. And it comes out very close, to what I do. Actually, it chose a largest winning trade that's very similar to mine, but it also chose a much larger winning trade, a losing trade than I have. Right? So So what I do is, you can just keep on calculating that and finding out, what it does each time. I can go to the individual page for that trader and see how that comports and whether or not it is, similar to what I do. And I don't do it to see if I'm doing okay. I do it to, gain an expectation of how this equity curve will look like over a long period of time. So this is 500 trades, basically simulating me. Sometimes it's great, like this is a great run. You can look at this as being different traders, each with slightly different results, right? But one thing you won't ever see is you'll never see a drawdown big enough so that it actually turns into a bust trade. Now, of course, this is assuming that you're not making stupid fat finger mistakes or anything. You're just following the strategy. But sometimes it's a harsh result, but most of the time it's a good result. So I just, sometimes it's an unbelievable result. Let's see if we can get to a bad result, which is entirely possible. Yeah, I would say that this is a result, mostly sideways, very choppy, big drawdown about a third of the way in. And I guess that's possible with these stats. But that is by far the minority. Probably, 1 out of 50 times you might see something like that. And I got to suspect that if you're, having this kind of performance, that it's either the market's problem or, it's a problem within the market, or there has to be some adjustment that we can make to make that better. But that's really a minority view. So, well, you don't see annual return. I have to have a full year. The service has only been around for a year and a half. The first half, like I said, I traded exclusively the E-mini S&P with a small account. And I do have those results somewhere. I'd have to find it. Let me see if I can find it. Forgot where I put it. Is this it? I'll have to look for it. I don't remember where I put it. Oh, I know. Might be in here. Sorry, I don't know where it is, but I'll find it later for you. But it shows the results quarter by quarter for last year's results. Yeah, it seems because the stream delay, or maybe I'm typing very slow. I would say that it's the stream delay, maybe, but right now I think the stream delay is only on about 5 or 10 seconds. So, all right. So anyways, that's I think, realistically, once you become proficient in this strategy, this system, there's no reason why you shouldn't be able to get results like this. Now, this would be an extraordinarily good result, where after 500 trades, it returned a lot. It almost tripled the size of the account. But that's unusual, I would say. But still promising. And that was a big drawdown in there. You don't see too many of those big drawdowns. Anyways, that's basically how this goes. All right, and so I think getting out when I did earlier today was the right move. So as I said, we're we're taking asymmetric trades based on a symmetrical butterfly. And a lot of our work and what we do here is try to figure out, what are the best times and places and best type of analysis to do of the markets so that we can properly place these trades at the right time to maximize our ability for returns. Now, we're not going for win rate because that's kind of obscures the whole idea. We're going for a total return on the capital used and our total efficiency. That's primarily what we're after. Those people that are looking after high win rate, they don't understand that there is always a caveat to that. High win rate means huge risk and very small profits. So you'll be going after small profits, and then every once in a while you're going to get zinged with a huge loss. And that invariably will bring you down below your high water mark and start you on a losing path and usually make you feel dejected and so forth. So that is the high win rate is a canard. It is like I don't know what's another way to put it. It is like the carrot in front of the horse. It is like the pusher man who's giving you free drugs for a little while until you realize the actual consequence. So high win rate is not what you should be after, yet that's what everybody is looking for. And I don't know any successful traders or entrepreneurs or venture capitalists or real estate execs, real estate millionaires, or anybody else that is looking for a high win rate. It simply doesn't exist. They fail all the time, but they take tiny risks. They go for huge outsized profits. That's how you win. That's how all winners win. Yeah, that's right, Milo. A crutch. It's basically a crutch. You get that dopamine effect. Literally, that's what a pusher man does. He gives you all these little highs, and then they all build up eventually to turn you into an addict. And then you get the monkey on your back, and you can't get it off. Diesel, how you doing? Anybody else have trouble getting fills when I need them on Thinkorswim? I could have gotten 2 pins today, but I couldn't get filled. They blew past my order. Now there is something that you need to work on. That's all about understanding, what you can put in as a limit order in order to get that fill. Now, when I first put on my trade there, I wasn't getting filled. It was very close and it looked like it should have filled, but it didn't. And all I did was I just dropped it 10 cents and immediately I got filled. All right. So it's just a matter of understanding that and being good at that cancel and replace function and then, placing it in an area where you'll know or have a very good probability of getting filled. Of course, it's very difficult to get filled as prices like dropping or rising very rapidly. So I got it when it came down. Let's see, where did I get out? I think it was somewhere around here, right? Let's see, what time did I get out? According to this, I got out at 3:08. So that would have been at 15 right here. Okay, so I get out right here, just as it dipped. There was a little consolidation right there. That's when I get out. Of course, it would have been better if I waited, but I didn't know if it was going to continue down or what. So I got out there, and then it continued up. If I had waited, obviously, if I had a crystal ball, I could have waited and maybe got another $20 out of this trade. Or I could have waited for it to come way up here and then come down here and got out and maybe got another $50 out of the trade. I don't know. But again, I don't have a crystal ball, so I got out when I did. Now it's going outside here, and the profit potential has dropped dramatically. So let's see where we're at. If you were still in that trade. See, now it's out here, right? And the max profit on that is only about $30. I get out with 200 and something. Of course, if it were right in the middle, it'd be worth over 500 right now. See, that's what the return distribution is all about. You don't know where the price is going to be. It's going to go back and forth, and it's your ability to be able to manage that that price movement and the profit there, and to grab whatever you can. Sometimes the pin trades just happen. They just slowly move into that pin trade all day, and then they finally end up there. And that happens about 10% of the time. The other percent, like I said, about 30% of your winners are going to be the mid tiers, somewhere between $200 and $400. And then everything between $0 and $150, $200 are going to account for about 50% of your winners. So that's the distribution. That's the expectation. So you can't really pull much more than that. You can try to optimize it, but that all comes down to your ability to manage that profit. Yeah. So Diesel, I would say that that is probably the number one, or maybe the number two thing that you need to concentrate on in this trading, and that's mastery of your platform, mastery of those type of techniques, of that cancel and replace, for instance, and finding the proper, I guess, the proper increments to do your trade to ensure that you get a winner, or ensure that you can exit the trade. All right, so as far as the trade today, here we are. We've got 13 minutes left. I don't know where we would have gotten in. I'm glad that I didn't, say, hey, let's take a trade, because it's just been going all over the place. It's been going almost straight up, but a lot of big dips. Where is this going to end? There's a good question. Let's take a look at the ES, and maybe we can get a look at the volume profile for the session. And we can see that for the session, if it ended up on the POC of this session, that would be certainly, great for this trade that I took. It would bring us right near the pin, but it doesn't look like that's going to be it. We don't have much time left, so I'm going to say that our next best hope then is probably right where we are at here. It's hard to tell. Now, you have to consider also that tomorrow is a big day for the market, and so the market is really just trying to stay within a range until the Fed comes out with their rate hike and then the narrative that follows. Now, see, the price is falling down now. Yeah, I don't have a good feel for this, so I'm gonna pass on this trade. But if I had to guess, I would say it's probably going to come down to this POC. I mean, that's usually what it does, but it's really hard to tell. There's just been a lot of this back and forth, up and down through this range. I don't think the market really has settled on anything. These, relatively wild swings throughout a trading day are now coming back. They usually get here prior to big announcements. All right, so Milo says, I put on a single 10 wide 3860 at 230, hoping for the best here. 3860. Yeah. Well, is that on the SPX or the ES? Ernie, will news unit ever find employment? I haven't heard from him for a long time, so I have no idea. Well, good luck to him. On the SPX, so 3860 on the SPX. Let's go over to there. So 3860 on the SPX is up here. So there's about a 15-point difference. So you're right in line there, 3860. So we would add 75. So you're right about here. That's very close. That might end up being a good trade, but you're right on the edge. You know, you've got 10 wide. That means that you're inside of the profit tent. But hey, got my fingers crossed for you. Aaron's hoping for 38.65, which would be up around here, right about where we're at. But look at it, it's starting to drop now. Darn if this is going to be a pin. So right now, had I stayed in the trade, it would have been worth about $330, and I got $240. All right, so there it is right there. But how do you know that? How do you know? One of the reasons I get out early a lot, besides the fact that I tend to take quicker profits. Every once in a while, I just feel good about a trade and I just let it go and run into expiration. But the other reason I do it is because I am managing and running a service with like 750 traders. And so I have people asking me questions. I'm managing the back office stuff. I'm doing the marketing, the everything. So it's just easier for me to get out, and particularly when I'm trying to conduct a live stream and not have to manage it. So for that, like I said, I take one for the team. Yeah, look at this. Now it's worth $392. And we have 8 minutes left. But see, it could, where is it going to go? See, the gamma risk is huge right now. You can look at see the gamma risk in terms of the slope of the P&L line, that purple line. The steeper that gets, the higher the gamma risk, or the sensitivity to price movement. When we're near the middle, the gamma risk gets reduced dramatically, but then increases as it goes from edge to edge. All right, so now my trade is worth $500. Oh, darn. So it's worth twice as much had I stayed in. So we have 7 minutes left in the market. So while we're waiting to see what happens, into the close, let me repeat the new feature that is on the YouTube channel. If you, let me bring back the big head. If you were to go down below here, right about there, I think, you'll see a little join button. And so if you click that, you will pay a monthly fee. It's a lot less than our trial fee, but for that, you get a portion of the service, a very important portion, which is our live stream every day from 10:30 to noon, where we almost all the time are taking trades and we'll talk about the strategy and so forth. Now, you don't get the full expansive part of the service. You get that sort of, shortened, condensed version, and obviously you're not getting any personalized coaching and mentoring, but you're getting a lot of knowledge in that area, and so you pay appropriately for it. So that's what that join button right about there. So if you're interested, join there. You can test out the service, and then if you want to take part in the full-fledged service, then you're welcome to do that. Or if you just want to stay there, you can stay there. Join. All right, Milo got out $500 even on a $95 position. How's that? How's that? Yeah, of course it is. It's way more fun when you're not sweating huge risk. A $500 trade, a winning position in the other service, they would have had to put up about somewhere between $5,000 and $10,000. All right, 5 and 10,000. Let's be generous and just say 5,000. They would have had to put up $5,000 to make that $500. You put up $95 or 1/20th, less, well, like 1/22nd, right? So you were 20 to 25 times more cost efficient than if they had made a lucky trade like that, which is unlikely because they would have had to put on a lot of contracts and bet big and put a lot of their money at risk. Nice. See, everyone supports our members. You're pointing to the dislike button. Well, I can't see it. I have no idea where it is. Let's see. You can see it. It says join, right? It says join somewhere. Maybe it's right here, right in the middle. Is it right in the middle? I can't tell. Here, I'll go to my my channel, and I will turn this on. Well, see, it's under the share button. All right, so I'll do this again, all right? See, I can't point it because the dislike button's in the way. It's under the share button. So right on my shoulder, right about there, next to the, is that where it is? All right, so we get a question here. What is the source of the chart volume on the right that we start off each day? That's Trading View, and that's the volume profile. So that's part of the course inside of the service. You should learn about how we actually analyze our trades using only volume. We do not use any technical analysis, no moving averages, no RSI, no MACD, nothing, no trend lines. All we use is volume. All right, we're coming in on the last minute. So, oh my God, my trade. I don't even want to show this. Look at my trade would have been near a pin. It would have been worth $900 right now. Oh, I don't know what to say. How do you position it on the right? You use the viewable range option in volume profile. And there is if you can position it either on the right or the left. In the settings, it allows you to choose either or. Look at that, a near pin. I hope others stayed in this. It's worth $860 right now. What the? It's the way it goes. See, now it's moving out of range. See, the gamma risk is super tight. We've got less than a minute to go. Will it pin? That's what I want to know. And there's bound to be members out there that have brought it into the close. So there we go. There, the trade would have been worth $732 if you brought it into the close. And so, yeah, Mila's saying, yep, really near the control point. And that's what I said before, right? Yeah, look at that. Right in there, right at the point of control. That's where it closed. So we should pay more attention to that, I guess. I'm sure that many people in the service made a lot of money today. A lot of money on very, very little risk. All right. So that's, I got to emphasize that. Dozens, maybe hundreds of people in my service just made a lot of money on extremely low risk. I mean, you can even say that what I made was definitely a lot of money on very low risk. Didn't make as much as I could have because I couldn't just stay into the trade. But there you go. Ray says, don't sweat it, Ernie. Looked like it was running away. Taking regular profit is good for the long term. Yeah. No, I'm not sweating it. I'm just, you're allowed to, I think, express, that those feelings. People say that there are no emotions. See, this would be better than me saying, oh, I got $900 of loss and I could have had $200 of loss. See, that's what the other guys are feeling right now. Instead, I have this high quality problem saying, I didn't make as much profit as I wanted to. But I will. I'll get back there. And I did make a new high, and I'm making at the annual rate of about 70% return. So what do I care? Well, I do care a lot. I mean, I'd love to make 1,000% return if I could, but that's obviously unrealistic. So Matt says, yeah, not a bad day when you only make 200%. Yeah. So there you go. All right. Hopefully you enjoyed that. That's what it's like every day here at 0 DTE. Now, besides the fact that, we have an outstanding strategy that has just loads of edge, and the not only the strategy, the methods are superior. The process that we use is a continuous improvement process. It encourages you to get better and better every time you get out there. But on top of that, you're getting first class, world class, and I can say this without, looking like I'm patting myself on the back. You're getting world class support, world class coaching and mentoring. Now, what does that mean? Well, I am somebody who has coached and mentored the highest paid individuals in industry. They used to pay me multiple $1,000s a day just to give them advice. So, and I'm providing that same kind of service in here for a fraction of that cost. A tiny fraction of that cost. So when I say you're getting world-class support, that's exactly what you're getting here. This same service should cost 20 times more than it does. Why do I do it? Because I have a great time doing it. That's why. All right. Looks like we're done here. I want to thank everybody for showing up. And of course, to finish off the day, we must go out with music. Peace to you all. We'll see you tomorrow. Same time. We'll have another topic. Take care.